Well, good Thursday to everybody. Welcome to our webcast on long verticals and diagonals. I'm Connie Hill. Happy to have you join me here today. Something is going awry here. Let me fix it. Maybe this will be better. All right. I am joined in the chat by Barb Armstrong. I'm happy Barb is here. Barb mentioned she's going to go snowshoeing today after our day because we just got a ton of fresh new snow. And it made me think about the Olympics. How many of you are enjoying the Olympics right now? The Winter Olympics in Italy. It's been kind of fun. I've enjoyed watching them. And just like with the Olympics, there's probably a sport or two or three that you might be interested in, right? Maybe not everything appeals to you, but there's probably something. Well, the trades, we're going to look at a lot of different types of trades today. And my hope is that you find something that you might like a little bit, all right? Meaning maybe every trade isn't for you, but hopefully you'll find some that you're like, yeah, I kind of like this approach or this style or this strategy. Okay, so that is where we're going here today. Let's go through our disclosures. Before I do, I want you to make sure if you are not already, follow Barb and I on X. I'm Connie Hill CS. Barb is Barb Armstrong CS, and we'll post educational content, things we're seeing in the market. We'll post about them throughout the day, right? Throughout the business day. All right, let's go through our disclosures. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and education. Do not consider it a recommendation of any sort. We'll be using the Paper Money software application. This is what you download to your personal computer. It's the most robust version of Thinkorswim. The web version's a little bit different, as is the kind of your one on your phone. Your mobile versions are a little bit different. Investing involves risk, including the loss of principal. When we're talking about probabilities, keep in mind that they are theoretical in nature and not guaranteed. One thing that is different about the Paper Money platform than the live platform is that it will not assign anything early if you're short an option. The live markets, that's different, right? In the live market, you could possibly be assigned early on something. So we like to make you aware of that little difference there. Past performance of any security or strategy does not guarantee future results or success. Oh, somebody, high spirit, says you've been sacrificing watching the Olympics for option learning. Oh, and plus you've got a smiley face there. That's great. Olympics probably isn't for everyone, but there can be one or two events that kind of catch your attention. These days, I'll tell you, I've been very interested in, I can't remember what it's called with the snowboards where they're kind of going down this track and there's these ramps and they jump and there's ramps and they jump and there's a race. There's 4 of them that are doing it at one time. I've kind of enjoyed listening to that one. All right. This class focuses on just 2 strategies, and they're somewhat similar, long verticals and diagonals. We're going to be looking at some sample trades that we've got sitting out there. Some of you wanted some follow-up on a couple of our trades last week, and I didn't do that, so it's going to be top of the agenda this week. And then we're going to be looking at some new examples as well. Now, those of you that are maybe a little bit new to diagonals and to long verticals, let's just talk about it a little bit. There's going to be 2 legs, one we buy, one we sell. Now, with a long vertical, they will be the same expiration date. All right, so March 20, both legs are going to be March 20. With a diagonal, we have different expiration dates. So sometimes our long leg will be dated out further than maybe the short legs that we're selling, okay? You can be bullish and bearish in both strategies. And we've actually got some bullish and bearish of each of these that we're going to look at here today. So yeah, CB says, I want to make sure we review the NVIDIA and Tesla diagonals. Absolutely. It's going to be at the top of our agenda. Let's hop on over to a Paper Money account. Let's see if the market, it looks like maybe it's just down 0.25% at this point. Not a ton of price action here today. This is a pretty dinky candle. You can see the S&P is just kind of going a little bit sideways right now. not really making a big trend up or big trend in. Yeah, I had hit this all-time ultimate high at the end of January for what value was that? 7,002. It looks like it went up to, but it just kind of going a little bit more sideways. What about the volatility index, the VIX? I hope you bring this up once or twice a week. Just kind of keep track of it. Just take a quick look at it. It is staying up in a little bit higher ranges where we're noting, there's some swift movements. There's some big movements in the stock. If we see big candles, either on an index or a stock, or sometimes we see really long shadows to either side. That's an indication of the implied volatility that's happening with these stocks. So it's up here at 20.25, and so that's in a range where it's a little bit more volatile. What does that do to option prices? Well, one, it makes option prices a little bit more pricey. That could possibly be useful if you want to be an option seller of some sort. The other thing it does sometimes, and this is really annoying when this happens, but it spreads out your bid-ask spread sometimes. In fact, I looked at some things this morning, and that's kind of what I've been noticing over the last 3 weeks, that some things that usually are pretty liquid are having wide spreads. In fact, I rejected several trades today simply because the spread was too wide. It was like, no, we're not even going to go near this. Okay, so that's kind of how it's going to impact you as a trader. FibZone says, well, it feels like the world's crashing apart in your portfolio. We have noticed there's been some rotation out of different names and different stocks and sectors and industry groups. So you want to keep your eye on that. Let's see. Ted Barron says, when I have a chance, look at the comments posted to YouTube's for last week's webcast. I will do that, Ted. Try to look at those every day. So I'll be doing that later on today. Be happy to. And those of you that do have questions, do exactly what Ted did here. Post it out in the comments section in YouTube. Because I go back and look at it, answer your questions, see what's going on. It's a great place to communicate with us because we are not super accessible, right? So you can work with this on X, going back and forth, and you can post comments in our classes. So we can just encourage you to do that whether you're here live or you're listening to it on a replay. All right, let's take a look at some of our trades, shall we? We're going to spend a little bit of time here because we have a lot going on that we need to talk about here. I want to start with Akamai. We'll just kind of go down the list here, all right? Akamai, just a quick look, we're up on the trade. Okay, well, that's helpful that we're up on the trade. Let's see what we've got going on here. We have a longer dated option, May, and a February option here. So knowing that we have two different expiration dates should make your brain think, oh, that's what kind of trade? Yeah, that's a diagonal trade. When they're the same dates, then in this class, then it would more likely be a long vertical. All right. So diagonal here, we're long dated this 95 call, and we're up nicely on this call. Look at that. We bought it at 1060. It's now worth 19.25. We are short the February 120 call. It's going to expire tomorrow. Okay. We collected 490 on it, and now it's worth 287. So many times we'll want to get as much of that premium as we possibly can. But if we don't get all of it, then usually the trade-off is then our longer leg is doing really pretty decent. So let's go just look at the stock here real quick. Let's come over here to Akamai. And let's just kind of zoom in here. It had these 3 days really moved a lot. That the pop and the pop here, first pop was the 12th, which was last Thursday. Friday kind of continued, and now it's just kind of doing a consolidation. If you didn't know better, you'd think, oh, that looks like it's a flag that's forming there. Yeah, it does look like a flag that's forming. Now, these guys announce earnings tonight. Okay. They might have good earnings. They might not have good earnings. right? Many times, if you're holding a position and you're just really not sure which way, well, not that we really know which way it's going to go, but maybe if you're like, I don't know which way it's going to go, you might choose to not sell anything at the moment. Okay, you might say, let's let earnings come out, let's see what they do, and then we'll proceed. So on this one, just because of earnings tonight, this is the only reason why we're just going to buy this short leg back and not sell another one. This one has monthly expirations rather than weekly expirations. And so what we're going to do, we're going to let earnings pass. After the earnings are passed, probably tomorrow sometime, I'm going to come out here to March, and we'll go ahead and we'll sell a March call option. Depending on where the stock ends up, but we'll probably sell something a little bit out of the money. If it kind of stays where it is, we might sell maybe like a 120. We could sell maybe a 115 or a 120 strike price here. But we're not going to do it right now, okay, simply because of earnings. So let's just go ahead and buy this back. We want to be out before they announce tonight. So we're just going to create a closing order. We're going to recognize, yeah, we're not going to get all of 490, but we're getting some of it. Looks like the midpoint range is about 285. So we'll try to get filled here at, say, 285. Let's go ahead, hit confirm and send. Any questions on that? And if you're paper trading this along in your own paper money account, make a note to yourself to see what earnings do tomorrow morning, see how the stock is reacting, and then kind of do what I'm going to do. I'm going to go out and I'm going to sell, more likely than not, an option that maybe has a 30-something delta. Maybe it's a 40-something delta, but we're going to sell something a little bit out of the money. Okay, so CB says, yeah, what delta are we looking for? We are looking for, on this one, about a 30-ish delta. Okay, very good. All right. Ooh, APA rocked and rolled out today. Oh, have you guys seen some of the oil stocks? We're going to look at oil. Hopefully we'll have time. Man, did some of those shoot out of there like there was a, their hair was on fire or something. All right. Next one up, that's our Akamai, and I'll make sure we get filled on that today. Morgan Stanley, we've been in this diagonal a long time. We had purchased a May option. It still has about 85 days before it expires, but look at the values here. On this call, we started out at $16 that we paid for it, so it was a pretty expensive option, and now it's down to 6.85. Now, when we get down to maybe say about half of the price of this longer dated option, we might think maybe things are not going so well for Morgan Stanley. Maybe this call diagonal is not the trade to work out here. We're going to go take a look at the chart, and then I'm going to come back. We're going to talk about what we're going to do here. I want you to notice here, even our short option, this is the one we received 225 for, and we would love for the option price to be dropping. But in this case, it's actually a little bit higher. We're down on that side of the trade too. So let's go look at the chart of Morgan Stanley here and get that over there. Morgan Stanley, we've been in for quite a long time, and I'm going to just maybe zoom in to this part of the chart. They announced some earnings on the day that we got in. It was a nice candle bouncing off of the support of this trend line in this channel on the day that we got in. We got in pretty early, so I don't think the candle was clear up here. It was more down in this area. And then after that, it just kind of went sideways. So we bought back our option that we had sold at that time, and we sold another one. And I kind of had this little yellow dot here letting us know that's the date that we did that. But since then, what has it done? Oh, man, it really broke through some significant support here. Now, if some of you saw that break of support and that it broke significantly and you chose to get out, I think that is not necessarily a bad idea, okay, because the trade really is not working out as well as we would like it to. Now, right now, it's sitting at support. Because it's sitting at support, I want to give it the opportunity to rally a little bit again. However, if it closes again below, we have a significant close below this 173-ish area, we'll go ahead, we'll get out of the trade. Okay, that's what we'll do. We'll get rid of that long option. We'll take our lumps. We will have some premium that we sold that we've collected that are not showing up here anymore. It doesn't show up in your P&L position statement because it's no longer a position, but it's a closed position. But yeah, we actually have some premium to help offset the cost of our longer dated option. Okay, so since this expires tomorrow, let's go ahead and roll it. It doesn't have earnings coming up. All right. So let's go ahead. We're going to physically roll this. And let's go ahead here. And I'm going to say create rolling order. And all rolling is closing out one trade, in this case, the 172.50 call, and doing something else with another. So we'll be selling a different option. Okay, and we are doing it in one continuous motion. If that's confusing to you, just do them in separate steps, right? Close down the call, be done, then go out, sell the new call, be done. It used to be a real advantage when commissions were paid based on the order that went in, and so you could get two filled for the same price as doing one. And so that's when rolling was really quite big. But again, if it's confusing to you, just do it separate steps. Okay, so here's the leg we're buying back. The one that expires tomorrow, the 172.50. Now, it doesn't know what period we want to go to. It doesn't know what strike price we want it to go to. We need to tell it. Okay, so we are going to go to the February 27th. And I was looking, let's see if this still looks good. I was looking at the 180s. So we're going to scroll down here a little bit. Here's our 180. Let's see if this still makes sense. It's hard to know if this, we might change this up a little bit here. 180 is at a 26 delta. So yeah, we would get some premium out of it. I don't mind the spread here, but I think what I'd like to do is actually let's do the 177.50 because it is a 30-something delta, which gives us a probability of about 65% that it would expire out of the money, which is of course what we would love. And then next week, we're going to hopefully buy it back and sell the next one out. Okay, we just want to be continually selling against it. And we've got that longer dated one that ideally we'd like it to go up in value too, just like the Akamai one is. We would love for Morgan Stanley to start going up as well. So let's do it. Let's do February 27, which it already has the right date, but let's change this to the 177.50. And looks like we're down on the trade a little bit, right? We're down on that option. So it's going to cost us a little bit of a debit. That's okay. We're good with that. We're going to send it on. And we just got filled on it. I guess my sound must be turned off on that, so we couldn't hear the pleasant little chime. All right. Now to our trades from last week, where we haven't had as much time in them. Let's start with NVIDIA. On NVIDIA, as we look at it here, you can see initially it looks like maybe we're a little bit down on the position of 67.50. And that's just a reflection of what's happened in this longer dated put option. It's kind of our hedge leg, okay? The idea with NVIDIA and the idea with Tesla, we're doing put diagonals on both of them. And the idea is we are buying out a longer dated option, and then we want to sell premium, sell premium, sell premium against it every week. And last week we introduced you to the idea that the Mag 7 stocks, as well as Broadcom, now have options available on Monday, Wednesday, and Friday, not just Friday, okay? So a few of them started receiving that status, and so we took advantage of that. So I want to show you on NVIDIA, if we come over here to the account statement, and let's get our NVIDIA here. This is what we did initially. Okay, we had a $5 net debit. We collected $190 in premium. This is our longer dated one right there. And this basically expired worthless. Okay. I was just kind of watching it, seeing what it would do. Sometimes you might want to roll, right? This expired yesterday. This was our Wednesday option. So in the account statement, it's not going to reflect that we collected that $190. Although if we're tracking it and maybe you're using a trading journal or something like that, you would want to track that, yeah, we were able to keep that entire 190. And so even though on our position statement, looks like we're a little bit negative, which we are with the long one, it's not counting that shorter dated one that expired worthless because we don't own it in our portfolio anymore. Okay, but it's still part of the equation as far as figuring out, you know, if you're up or down, or you know what your values are in the trade. Okay. Let's see. KB wants me to show MS option. That's the one that we put in here. No, we didn't. Let's see. Where did it go? Did it get? Oh, it got filled immediately. All right, there it is. This is the one I think you're wanting to see. You should be able to see it up there in the filled orders, looking for the Morgan Stanley. Okay. So what are we going to do here? It doesn't have earnings. Yeah, it does have earnings coming up. When is it here? Next week on the 25th. So the 25th will be next Wednesday after the market closes. So it's about a week out. Now, we've got that longer dated option. Our intent actually is to be in the trade over earnings. If they pay a dividend, over a dividend. It's not intended to be avoided after earnings per se. However, if you did not feel comfortable selling an option before the earnings, you could just leave it alone and just hold on to our long option like we do. For our purposes today, though, we're going to go ahead and sell. All right. Since this expires on, or they announce on Wednesday, one thing we could do is maybe we could sell a Wednesday expiration option rather than, say, a Friday. So as we come over here to the trade tab on NVIDIA, let's see here. We could sell the February 27th. It has about 8 days till it expires, which would be next Friday. The 20th, what is this one? Yeah, the 23rd is actually Monday, and there's not a Wednesday on the 25th. I'm not sure why there's not a Wednesday on the 25th. I don't think it's a holiday. Maybe it's a holiday and I don't have it on my calendar. In any case, usually it would be Monday, Wednesday, Friday, Monday, Wednesday, Friday. So in this case, let's do this. Let's go ahead. Let's sell the Friday, but we'll see how things look before they announce earnings. See if maybe we can capture a lot of that premium. All right, so we'll go February 27. We're going to go over here on the put side of things. I was looking at doing the 180 with a 0.3 delta. Okay, that still looks about right. Let's go ahead. We're going to sell this 180 a week from tomorrow that it expires. Okay, that's about 335 of premium, so not too shabby. And percentage or probability it could expire out of the money, which is theoretical in nature, 66+%. So typically anything over 60% we consider higher probability. So we're going to go, let's see, yeah, Ted says, well, the 25th is not too far out. You're right, it's not. That's why we're going to watch it, okay? And if we can buy this back and say we've collected a decent chunk of it, we're going to go ahead, we'll get out before the earnings, we'll let earnings take place. Wednesday night, Thursday morning, we'll be back in class and we'll decide which one to sell against it at that time. Okay, that's going to be our plan with that one. Bring in that 335. We'll hit confirm and send, and it should know to go to our dynamic diagonals grouping. I forgot to send the other one there. I'll have to send it there later. All right, looks like it went ahead and filled us on that. Okay. Let's see. Prakash wants to know, how can we do AMAT or Netflix same strategy? Prakash, are you talking about doing a diagonal? You would just kind of follow the steps that we are. Looking at a longer dated option, selling a shorter dated option. And depending on how far out of the money you sell it, tells you how aggressive you want to be. Further out of the money is more conservative. At the money, typically it's considered a little bit more aggressive. Now, I am noticing a survey out in the chat. Barb's posted that there again. Thank you, Barb, for doing that. And you guys know from time to time, we'll do a survey. See, how is this class today going for you? Now, the class isn't over yet. But what I'd love you to do is just click on that link so that you have it. So when you need to leave or we close down the class, you can fill out that survey. It's really easy, 2 questions with radio buttons, plop, plop. I like easy surveys. There's 2 questions if you would like to answer. We'd love your feedback there as well. But I also will encourage you to use it as space that you can communicate something to me, okay? Like, hey, would you cover this in an upcoming class? Or I have this question that still is I'm a little foggy on, or whatever, okay? Feel free to communicate that kind of information to me as well, because I do like to bring those into our classes. All right. So Prakash is saying yes with these diagonals. Yeah. Kevin says, is there a long put diagonal for a stock that has been downtrending for a long period of time? We do not have one on that reflects that, but that certainly is something that you could consider doing in our class. Absolutely. Okay, we've got Tesla to go through. We just finished NVIDIA, and we got filled on that option. So we're in good shape there. Now we have a short to go with our long. Last one is Tesla. Now, when we put on Tesla last week, we put on a Friday expiration rather than a Wednesday expiration, okay? So this one has one more day before it expires. So we're up on this one a little bit, which is nice. We've been able to capture quite a bit of the premium here. We sold for $20. Now it's down to $1.15. If we wanted to buy it back, that's how much it would cost us roughly, right? So on that leg of the trade, we're up about $305. So that's actually been the moneymaker part of this particular trade, is that short option. The put, its value actually is holding in there pretty decent. It was out of the money. If we go look and see what the chart looks like. What do you think the chart should look like? If that's what our values are, and if our short put is the one that's been going up in value, yeah, this thing maybe should have gone up a little bit since we looked at it last, right? Let's grab Tesla here. And let's kind of come in here and zoom in. We got in, what day was that? That the 10th, we got in the 12th. So we got in, make sure my mouse is on the right day. We got in this day, okay? And so that's interesting. Am I looking at the right numbers here? Right stock? Yeah, because this was 402.50, and I put a little line there where our short leg was. And so it did. It stayed above 402.50, bouncing up off of that area here today, but we're going to roll it. All right, we've collected a decent chunk of that short option. So we're going to sell again. And typically what we're going to do is sell down here where we think maybe the stock can stay above. So we're at 102.50 right now. Let's just look at our options and then we'll go do a roll on it. So we're going to go, which one had we considered here? I think I may have gone out of our trades out of order here. 422.50. Is that right? That would be on the call side. Let me just come back here for a moment. Yeah, we want to go maybe something a little further beyond, right? Beyond 402. So let's just go to that put side of things. Back over here. So we could maybe go, we could actually do the same strike price for a 250. We could go about maybe a little bit more, give us a little bit more cushion. We've got a 29 delta, we've got a 26 delta, okay? Super open interest here, so we're not concerned about the liquidity of the options. So let's go ahead, let's do 400. That would give the stock about $13, almost $14 of leeway from where it is right now. All right, so we'll sell a 29 delta. If you're more comfortable going further out of the money, you could. If you wanted to be more aggressive, you could come in more aggressively and sell something a little bit closer to out the money. We're trying to balance that probability of expiring out of the money and bringing in a decent premium. And of course, this is a pretty expensive stock, so the premiums are on the juicy side of things. All right, let's go with the 400. Let's go ahead, select on that bid price. Oh, actually, I take that back. We want to roll. We'll go back to our position statement. Let's get rid of this one right here. So we're going to do a create a closing order. We're not going to sell the diagonal. We are going to, let's see, create rolling order. All right, we want to do the February 20 40250. Just make sure we're on the right one. That's the one we want to roll. Then again, it doesn't know which area we want to roll to. It doesn't know. Okay, so we're going to choose here. It picked the 23rd, which is Monday. So we're going to come out here. We're going to pick the 27th, which is Friday. And then we said strike price 400, I believe. Let me just double check that. Yeah, we're going to go with the straight 400 down here. Okay, so we're going to collect another little bit of a credit. And so it's not going to show up with this one on there tomorrow because we're closing out of it. But did we get a chunk of change out of it? Yeah, we got in the neighborhood of $296 for that particular contract that we're going to keep. All right, here we go. We're going to roll it and go ahead and hit send. All right, looks like we just got filled on that. All right, let me see your questions here. Kevin was saying, is there a long put diagonal that's been trending for a long period of time? We really haven't done that approach yet, but it would be logical to do a long put diagonal on it. Louise says, out of the money has been conservative in diagonals. Is the same for a long vertical? Actually, it's not. The further out of the money we are on a long vertical, the more aggressive it is because the further we need the stock to move. We're actually going to look at a long vertical here in a moment. DJ says, would I be better off if I do the short later if the underlying goes up? So I'm assuming here, JD, you're thinking, okay, I'm in a diagonal. If I do the short later, meaning sell the shorter leg later, if the underlying goes up, yeah, some people might choose to do that if there's like an earnings date out there like there's going to be on NVIDIA, right? They may say, I will wait. Let's see what happens, then sell it. In our case, I wanted to go ahead and roll it. We're hoping to be out before they actually announce next week. All right. You guys have had some very good questions. All right. Prankish, sorry, AMAT and Netflix were not my trades of choice to show you today. Okay, but you certainly could do just like what we're doing, right? Pick a longer dated one, April, May, you know, you might even go out to June, and then a shorter dated one to sell that premium and help. The idea with selling the premium is to help lower the cost of that the long leg. Now on Tesla and NVIDIA, we went kind of out of the money on them, so they wouldn't be quite as expensive. But the idea is still the same. We want to sell premium each week, sell premium each week, sell premium each week. Okay, so that's going to be our plan on Tesla, NVIDIA, and actually Morgan Stanley, if it cooperates with us, and Akamai. All right. we've spent a lot of time in diagonals, which I'm really glad we have because it's a detailed strategy. And I think it's a little trickier maybe to understand it well, and there's different combinations you can do. Okay, so some people might sell out of the money for that short leg. Some people might sell at the money, and you could even sell in the money if you wanted to. Okay, so there's a lot of variety that you can do. It just depends on how aggressive you want to approach the strategy. So our two trades, or maybe three if we get time for three, will be long verticals here. And I do think long verticals are a little bit more straightforward. It's not as nuanced. We're working with the same expiration dates. That just makes it a little bit easier for us to deal with, knowing that, yeah, they're going to be both the same expiration date. Now, want to start out here. I'm going to start out one here that I'm going to let you guys vote. All right? Can you believe I let you vote? Yeah, sometimes I let you vote. And I let us go with whatever it is that the class decides. Walmart announced this morning. Now, it was looking a little bit better when I was looking at it here earlier. And so it looks like they announced earnings. The initial reaction when I was looking at it was up here. It was a green candle. Now it's a red candle. So it's not looking as favorable as it was. We're still going to go ahead with this. On this one, because it is looking a little bit more bullish and it is sitting at support, I mean, we could come in here and draw a horizontal support area here. I don't like the candle here today, but we're going to proceed with it, even though it's not perfect because it's sitting at support. But we're really looking for Walmart to move up here. And it has been, right? We can see the trend. This was a nice flag. It broke out of the flag. It didn't go through to the target that maybe there was for that flag pattern. But let's come over here to the trade tab. All right, so Walmart has weeklies, so it'll have those Friday expiration dates in there. Let's see, somebody's saying the head and shoulders on Walmart. Yeah, maybe a little shoulder here, possibly a head here. That's true, could be. If this thing breaks down below the support line, we'll have to get out early, okay? But I am going to expect it to bounce a little bit here. So we're going to go out to the March 20 options. They've got 29 days before they expire. I love the liquidity here. Look at these thousands of contracts. Oh, we love to see thousands of contracts. So I was looking at, let's see, the at the money right now is going to be the 125. And so let's go a 125, 130. We'll say buy vertical. Kind of move this up, so we're going to talk about it. And so this is actually a little bit nicer than what it was earlier today because it's pulled back. And so this is saying, hey, we would be risking, and I'm gonna stick that back at 235 and lock it. We would be risking 235 to do what? To make $5 minus 235. That should be what? 265, right? So actually, we're risking less to make more than 100% on the trade. If we take our little calculator and we say 2.35 divided, actually go the other way. Let me start with my gain. 2.65 divided by 2.35, it's about a 112% potential gain. Now that's pretty aggressive. Okay, so that's going to be trade number one. Trade number two is going to be more conservative. We're going to do a blast all so we can look at both of them, and these are the two I'm going to have you vote between. We're going to do 120, 125. Let's see how this matches up now. And we're going to say buy vertical. And I'm going to lock that. I'm going to lock in the price at 350 here. So this one, we risk 350 to make 150. We need the stock to go beyond 125 to be successful here. And it's already at 126. Okay, so this one is your more conservative setup. I'm going to call this one trade B. And the other one we're going to call trade A. So this one up here is trade A. This one down below is trade B. Which one do you guys like? Go ahead and vote. Okay. While you're voting, I'm going to go back to our little calculator here and we'll work out what percentages look like here. So in this case, we're risking 350 to make $1.50. So I'm going to divide 150 by 350. That's about a 42% return. Now, many times we might get a 42% return in a credit spread, but not usually so much on a debit spread. Okay, so I'm going to have you vote. I'm not going to do both of them. Sometimes I'll do both of them. This one, we're not going to do both. We're just going to pick the winner picks it all. The winner of the A and the B contest here. So I'm seeing, ooh, A, 1, 2, 3, 4, 5 Bs, but more A's than B's, although I'll say it's split a little bit here. Now, if they are saying, let's add something to this and put it as a conditional order, do it as a buy stop so that the stock has to go up to fill before we get in, okay? We are going to go with trade A because there were more, no wait, were there more A's or B's? Now I've lost count here. There were so many. I think you guys liked A, more of you liked A than B, but it was really close, okay? So this is what we're going to do. We can't do both of them because our 125s would cancel out each other. Move that out of the way. Let's do the top one, but let's do it aggressively, okay? Let's get rid of that trade. And so let's put a condition of entry on this one. What would the condition be? Should we say if the price of the stock goes up to where it's past its high today, its high was 130.10, what if we say fill this if the price of the stock gets to 130.2, 10 cents higher? Then maybe it's starting to move that direction a little bit, okay? So we're going to do that at 130. I'm going to 130. 130.2. There we go. Get my decimal in the right spot. Now let's go ahead. Let's make this conditional. If we make it conditional, we're going to have to change this. We're going to have to change it to a market order. We're going to have to change it to a GTC. Might happen today. Maybe it happens tomorrow or the next day. If we don't get filled in a day or two, we'll probably want to rethink it. Okay. And so we're going to say when Walmart mark price is fine is greater than or equal to $130.20, then kick off this order. We can do it as a market order. We could do it as a limit order and tie the limit order price to looking for the mark, the current mark price. We could put it at the current mark price, which would be at the current midpoint, and would put it in as a limit order. So we're based on those values, so we have a little bit more control over the order. Okay, that's how we're going to do that. We're going to put that in, and then after it gets filled, if it does get filled, then we'll go ahead and put our exit on it. Our exit to do, if we get a price exit on it, we get premium, and we're saying, hey, we got 60% of the trade or 70 or 80 or whatever we decide, we'll go ahead and put on that exit. All right, we just got filled on something there. That's good. Now our time, oh, Lisa's saying BBB1. I'm sorry, I chose A. Yeah, it was about 50-50. We got to wrap up here. My time is up. So a couple of things. Number one, go back, fill out that survey for me. Always appreciate it when you do that. 2, follow Barb and I on X, Connie Hill CS, Barb Armstrong CS. If you found this helpful today, go ahead and hit the like button on your way out. And then make sure you're a subscriber to our Trader Talks channel, because then you can find our content so much easier, okay? That little blue YouTube logo down in the bottom right, you just click on it and it'll subscribe you. Now, you only need to do this once. If you do it twice, it'll unsubscribe you, okay? So just do it for one. We had a lot of trades to review here. We've still got them all on here. our Akamai, Morgan Stanley, NVIDIA, Tesla. Now we have Walmart we'll be paying attention to as well. And I'll probably throw on another trade for good measure. All right, you guys, appreciate you being here. Now, coming up next is going to be Cameron May with investing in dividend stocks. So we'll have a little break here. He will be here right at the top of the hour. Okay, you guys, thanks for a great class. We'll see you soon. Bye-bye.